Hi traders, Paul Lemmel here. If you'll take a few short minutes to listen to this video, I'm going to show you why everything you thought you knew about drawing trend lines is wrong, or at the very least inefficient. If you have traditionally drawn trend lines across price randomly only to find that price would often break out of a trend line, then immediately drop back inside and stop you out of the trade, I hate when that happens, then you're going to want to hear this. Not only can it be costly, but it can also be dispiriting and might even cause you to miss the trade when the correct price trend line sets up. Now, don't get me wrong, the correct trend line placement in and of itself is not an exact science. There are some caveats with just about any form of technical analysis. But the key to being on the right side way more often than not when drawing trend lines is to understand that most trend lines that form operate within key cycles, and knowing which cycle will give you a solid trend line set can be done by analyzing the price action once a cycle sets. Just to give you a quick visual look at what I mean by that, cycles are like the telephone poles, whereas the wires are like the trend lines. Cycles are placed at specific junctures based on either bar count or time, and are very consistent in how they act across various time frames or trading instruments. These trend lines gravitate to straddling 10s in bar count, for example 7 to 13, 17 to 23, 27 to 33, 37 to 43, etc. The further you get out in time, the wider the fan becomes, and the more necessary it is to have the right cycle count to avoid an abundance of head fakes for extended price consolidations. Price action is driven by fundamentals, the strength or weakness of any news about the company's stock, and a lot of times just plain old psychology of traders, fear and greed. But price action, when combined with time, again, these are the cycles, can offer a powerful 1-2 punch in raising your trading consistency levels and trade performance. I want to introduce you to a new concept on proper trend line placement based on something I discovered over years of researching big winning stocks. I call these trend lines CAT lines, which stands for Cycle Adaptive Trend Lines, or Lemmel lines for short. Lemmel, that's my name. This is a concept I stumbled across after literally reverse engineering thousands of charts. What I discovered was that when you mimic trend line placement based on how previous big winners moved, you can often capture huge gains when you target stocks with similar momentum and price action profiles at inflection points, which are nothing more than optimal entry zones for a trade. Prior big winners, or big movers in general on any time frame, can act as a template to be used to guide you in the correct trend line placement on any trade that has a similar momentum profile. This is an area on a chart which, just by a quick visual examination, is the best place to enter a trade. It is the very beginning of where a new trend starts and a prior downtrend, uptrend, or consolidation zone finishes. Lemmel lines act as a predictive indicator because they are cycle-based and not merely simple trend lines. This can allow you to maximize not only your gains on a trade, but can help you avoid late entries that can raise your risk and diminish your gains. Let me expound on this. Since these inflection points are driven by cycles, all that we need to do as traders is to evaluate the quality of the price action after the trend line sets based on these cycles to find the one safe entry point that can allow for extended trends. Think of any stock that you are familiar with that had a big price run up. You might even want to pull up a chart and look at it with fresh eyes as I elaborate. Here's a chart of my own to explain my point. Spotify Technology printed our key IPO cycle, the TY1 cycle, in March of 2020. 10 months later, the price was up over 200% out of this key cycle. You see how clean the chart is? Just one trend line drawn correctly based on where a stock is inside of a super cycle, and no need to sweat the day-to-day gyrations. And again, once the longer-term cycle trend line is in place, we drill down with the shorter cycle trend lines looking for an optimal entry zone as below. Once the monthly TM1 cycle trend line prints and price finds support inside of this cycle, with elevated support levels suggesting a price squeeze is setting up, this is our signal to enter the trade. Do you see how easy and simple trend line drawing can be once you understand the correct cycles to use to draw these? Do you also see how many opportunities there were to get head faked into position before prices rolled back over and stopped you out? Another twist to this is these Lemmel lines also form channels that can allow for laser entries at the middle or sometimes far ends of the channels, right at the completion of the prior channel and the start of a new channel. Do you see how accurate this can be? Cycles can be very powerful. I myself stumbled across them while studying tens of thousands of charts over 3 decades. Nobody else is teaching this nor has perfected it, and not understanding how these cycles set up is just like trading blind. So stop trading blind. The complete and entire system came together over not only thousands of hours of chart study, but also trading. But don't let that intimidate you. The basics of this I can teach you over a few dozen hours. Of course, you're going to have to spend time in front of charts to fully integrate and understand this, just like you would with anything you want to master. Professional billiards players don't become masters of their trade by just reading books. It's the work at applying the knowledge they learn in books that gets them to a pro level. As I previously mentioned, these cycles that create these trend lines happen on all time frames and can be used not only on long-term trades like I prefer, but also on multi-week or month swing trades or even day trades. Cycles are not limited to use on stock charts. They can happen anywhere that there's a cause and effect event that sets into motion a series of reactions based on the significance of the event. We don't have to know all that. We just have to understand how to apply this out there concept to real-world stock charts. Much of the development of the system was done day trading stock index futures, which can have massive volatility, and the same cycles appear over and over on this and on any type of trading instrument. We have gotten trend line placement down to a science based on years of study and using this in the trenches daily. If you trade options, the added advantage of understanding and using these level lines is in knowing when a big trend may kick in, and by buying in these cycle-generated price squeezes, it can allow you to buy options on a stock significantly out of the money and hit home run trades, since the right cycle trend lines can forecast the potential for a big move ahead. One of our students did that a few years ago on ISRG, turning $5,000 into $120,000 in just 4 months. This is the power of capturing stocks out of the right trend line at these inflection points. For example, just in the past few days, one of our prime setups, the TM1 cycle squeeze, came into a stock ONON on Holdings, a footwear company, that blasted 50% on the stock and over 1,700% on the options in just a few days after the stock came out of the chute, a technical analysis tool we use that often gets us in the trade within 1% of its consolidation lows. Or AI, which had its option price explode over 1,200% coming out of the chute in just 2 weeks out of a TD6 cycle squeeze. This is what we specialize in here at the Big Kahuna Trading Club, finding stocks primed for big reversals and big trends using key cycle. Stocks heading into longer-term mega trends consistently operate off of 3 key trend lines before they break out. This is a long-term CAT3 cycle breakout, our dominant TY1 cycle on BE, Bloom Energy. This stock had a nice 400% gain in 7 months out of the TY1 cycle, which was forecast by our momentum tools months ahead of time. Here is an intermediate CAT3 on NKTR. The options on this play were out of this world due to the huge move in a condensed period of time. High vector stocks operating within defined cycles can create outsized gains, and these are some of our favorite trades to focus on. In really good market conditions, there are usually less than a dozen or two in the entire stock market that offer excellent risk reward, and knowing how to find these is made a lot easier when you understand how to use momentum and vector, as well as stock timing using level lines to target only the best trade prospects. Next is a CAT3 short-term swing on Tillery, TLRY, a cannabis stock that exploded off of its IPO out of a swing CAT3 cycle. Options on this trade soared 33x in just 1 month, turning just $3,000 into $100,000. How do I know that? Because I dumbly took my 100% gains off the table to avoid holding over a long Labor Day weekend and left $100,000 on the table. It happens. The short-term swing cycles for trendline placement can be especially powerful when combined with price action analysis. Here's another one, GNLX, a clinical stage biotechnology company. This is where understanding the subtleties of price action within these cycles is paramount to identifying the best of breed stocks. Once our first daily cycle completes, we weigh the price action of the subsequent cycles against the first cycle to identify potential price squeezes. The lows of cycle number 2 held above the cycle number 1 lows. That's a good sign. One more cycle left. Now cycle number 3 comes in, and voila, we have higher lows confirming through CAT3 that the price is squeezing off of the lows and the stock price blast out of the chute. In fact, the price action is so strong where you would normally get 2 bars pulling back off of a cycle set. By cycle number 3, price only retreated for 1 bar before blasting off for a 550% gain over 3 weeks. This is the power of understanding these invisible cycle lines when combined with price action analysis. Here's another example. Sometimes a squeeze is based not on a hard floor forming at the first 2 cycles, but a key moving average support like it did here on BLPH. This one had a great momentum profile, and all that was required was for the final CAT cycle, CAT 3, which was the monthly TM1 cycle, to find support, which it did at the 200 MA, and then broke out of the chute, blasting for a 450% gain over 2+ weeks. The most powerful part of using cycle adaptive trend lines or limo lines is that whereas an average trader who might not understand how and where these cycles set up might scroll through charts and miss this setup, while a trader attuned to stock cycles when placing trend lines may immediately see the stock's potential. Pretty subtle here if you were looking at the price action unaware of the key cycle line that printed in September of 2019, based on its nothingness pre-breakout price action. Here's a closer look at Overstock OSTK's pre-breakout price action once the CAT 3 is set. Once the internal cycle sets, again, all that we need to do is watch for the price squeeze coming in via elevated lows coming in off of the price floor. Once the price exits the chute, it goes on a tear, demonstrating the power of these cycle-based price squeezes. Here's an unusual pattern that doesn't set up often. It's a TM1 cycle on a very high BMI stock. This is one that my trading partner uncovered and bought. I missed out on this one. It blasted for a 300% gain in just 6 weeks. The options on these types of plays due to its sharp move were stratospheric. Whether you are a day trader, swing trader, or a long-term position trader, correct trend line placement is the key to avoiding unnecessary chop zones and increasing your winning percentage. Trend lines in and of itself don't magically serve up great stocks. They require the right momentum filters, and our BMI and VR indicators shine a light on these gems better than anything I know of. Take for example Coin in March of 2023. The BMI and vector reading on this stock was off the charts. After the completion of its first leg, the pullback into the TD6 channel at the midpoint of the channel near the 50 MA gave a perfect opportunity for a trained eye to catch an out-of-the-money $60 call option 2 weeks out for an 800% gain. These setups happen over and over in a hot market and to a lesser extent in a cooler or bearish market, but oftentimes they are easier to find when there are fewer prospects on the plate. I think you're probably getting the grasp on using trend lines correctly, combining the right cycles at the right time. Trend lines are only part of the game. Understanding price action inside of trend lines placed correctly is the key to massive stock market gains, especially when combined with option trading. In fact, if we were to treat the initial trade as a silo where the proceeds from the trade were rolled into the next trade and then the next and then the next, etc., it is possible to create unfathomable gains on your original trading capital. Now, obviously, you want to do this smartly and not throw your life savings or rent money into this or risk anything beyond your original trading capital by foolishly using margin when you're first starting out and don't fully understand the risk. So until you fully understand this, it is best to paper trade it or trade it with a much smaller position size until you get the hang of it. But if you're a late starter with investing and trying to play catch-up, intelligent trade stacking on the right trade setups can help you catch up fast if you have been lax about putting money towards retirement. There are more than a few caveats with trade stacking, including how to allocate big winnings from a prior trade into the next trade. You want to make sure you're only doing this on stocks that have adequate trading volume and can handle the trade size without negatively influencing the price. The returns shown are sample average premium option gains in our Big Kahuna style trading. These are on higher quality, higher scoring stocks. You don't want to do this on average momentum stocks with questionable historical price action. Some perform much higher than the average, and focusing on just the higher scoring momentum stocks using our BMI and vector indicators, it is possible to string together a series of trades that can accelerate your trading account growth. Just $15,000 distributed over 3 trade silos may be enough to push your annual returns over $1 million if you target the right stocks with the right trading strategies. It is not uncommon for the right momentum plays to generate 5x, 10x, even 20x gains or more, which would supercharge a trade silo strategy. I've even turned $158 in a trade into $15,000 in just a few months in just 2 trades, doing trade stacking in the beginning of my trading career. $15,000 would fund the beginning of 3 trade silos, so let's not use the I don't have enough money excuse. It doesn't take much money to get the ball rolling towards creating a significant retirement nest egg. So in summary, using cycle-based trend lines versus which you're probably using right now, randomly placed trend lines based on where you think price will turn, can up your trading game like nothing else. No complicated technical analysis, no poring over reams of financial data expecting to having the perfect economic snapshot of the company's potential is going to shine a light on the best stock to trade. The dirty little secret that some of the world's top traders use is that they piggyback along with smart money traders who leave a trail behind based on the stock accumulation. That allows those with the right tools to uncover their tracks and ride along with them. If you like trades that offer a higher level of predictability and can allow you the opportunity to stack trades together like SPSC here, which bounced off of our Cat 3 line for a nice 72% gain in 2 months. This was on the stock, not on the option. But due to the quick resolution of this trade, this was another one of those trades that can generate 10x, 20x, or more on the right option strikes. So if you want to learn more about how to find these stocks on your own or even have some of these trades spoon-fed to you, click on the button below to find out more.